Alright everyone, welcome to the channel. So in this video I'm going to be showing you how to set up moving averages on TradingView. Now moving averages are very important. Whether you're trading commodities, precious metals, the stock market or crypto, you will notice that there are some moving averages, which I will be talking about in this video, which are very important to all of these markets. And for this video, I'm going to be talking about the 200-day moving average. Before we do jump into how to get this on the chart, I just wanted to show you can see how well the growth of the SPY, which is the stock market ETF, grows when it manages to bounce on this 200-day moving average. You can see that it historically always bounces on this, and when you can see that it breaks below, we normally have these big flushes to the downside. As you can see, big flushes to the downside as you lose the 200-day moving average. This is the same in Bitcoin, although the 200-day is not as well respected in my opinion, but you can also see this is very strong resistance. When we break above it, this is very strong support. You know, you back test it, you fail, you break down. You fail to hold it here, you fail to hold it here, you break down, rejected. So these are very important moving averages, and I'm going to be showing you in this video on the SPY chart, you can do this on any chart you like, how to get the 200-day moving average. Now, first of all, let's start off with a blank chart. What you want to do is come over to the top left and click on indicators, and then you simply want to type in moving average, and you can click on it once. There we go. Now you'll see this moving average following the price. Now what you want to do is come up to the top left over here, and you'll notice this is where your indicator has gone. This is your moving average. What you want to do is you want to click this settings wheel, click on it, and you want to come over to the time frame and make sure it's on the daily. This simply means that when we do type in the number 200 in the length, it's going to be taking in data points from the last 200 days. And if you wanted, you could make this a 200 week moving average. You could make this a 200 month moving average. However, I do not recommend those personally. I do believe that the 200-day moving average is the best thing to use. I have also made a video on how to keep an eye on golden crosses and death crosses, which will include both the 200-day moving average and the 50-day moving average entail. So if you want to check that out, click on my educational playlist. I do have a bunch of important videos in there for you to learn. So getting back to the context at hand, you can see we put in the time frame 1 day and 200 in the length. This simply means the last 200 days worth of data traded is what we are taking into account, and we're going to put this on the SMA, which stands for simple moving average. You can click on style and you can make this any color you want. So for example, for the purpose of this, let's just mark this orange. And that is pretty much everything you need to know. If you want to click OK, there we go. You can notice your indicator, or rather your moving average, is fully set up. Now, like I said, I do have a video on how to use more moving averages at the same time, how to keep an eye out for death crosses and golden crosses, which is the 200-day and the 50-day moving average combined. But I hope this was just a simple video to get a lot of you started in the markets who are new to TradingView and don't know how to use moving averages. So, like I said, 200-day moving average, a very important macro indicator to let you know whether markets are bullish or bearish. Hope you found value in this video. As always, all I've got for you today. Cowboy out. Peace.